There are many investing strategies out there, but this one is mine. Hey folks, for those of you who do not know me, my name is Alex. I have a small personal finance, investing, and philosophy YouTube channel, which is what you're watching right now. I like to talk about investing, personal finance, but I find that there is actually a connection between how we invest, how we live our lives, how we manage our money, and then just life. Bigger ideas. And at the end, I always want to share some interesting investing ideas that I've learned, but also tie that into life principles that should make you think a little bit differently. In this video, I am going to be sharing with you how I invest, my actual investment strategy. And if you like what you've seen, I hope that you will like the video, comment, watch till the end. I would really appreciate it. But before we begin, I am not a financial expert. I'm not a financial advisor, I'm not a CPA, not a tax expert. I'm really not much of anything. I'm certainly not a fiduciary. I'm actually a chemist by formal training, but I've learned some things and I would like to share ideas and knowledge that I've learned over the years with you. So whenever you're making any major money investing decision, please consult a financial expert, a financial advisor, especially one who has a fiduciary responsibility. Now with that said, let me share with you my investing strategy. So first, to give you a big broad idea, I'm much more of a slow, long-term investor. You can consider me more of a Benjamin Graham and Warren Buffett acolyte. I like their philosophy, I like their ideas, and I generally adhere to many of their fundamental principles. So as such, I also live a very busy life, so I can't spend a lot of time looking at individual stocks and investing. I can't look at the broad market, and I am not much of a day trader. I do not want to watch a stock on a day-to-day or hourly basis. So I'll watch stocks on maybe a weekly or a monthly basis and make long-term investing decisions. And I would recommend that you do the same. I also have a variety of different funds on the range of taxable to non-taxable. I have a Roth IRA, I have a regular brokerage money market account which can be taxed, and of course I have a 401k, but that's based on the company I work for, and there's not really that much wiggle room in terms of individual investments. But in this video, I'm going to focus mostly on my money market account, which is the one where I really play a little bit more with. The Roth IRA is much more of a put it out there to the side and just leave it, but the money that's in my money market account I can use to make big purchases, things of that nature. Okay, with that out of the way, let's actually just get into what my investments are. So the vast majority of my money, I'm talking about 60 to 70% of my money is in an index fund. And this is advice that is touted by many personal finance and investing YouTubers, but index funds generally over the long haul will outperform any individual stock pickings. They have very low costs and they're fairly safe and well diversified. So I have an S&P 500 index fund. Another 20 to 30% of my money, let's just say 20%, are actually in individual stocks. There are some stocks that I've done some research on. I've looked at the analytics. They are safe companies, but they're also companies that grow, that pay a dividend. And I will invest in some of those companies. They're companies that I also look to as a long-term investment. I'm not necessarily trying to sell them. And these are also companies that don't have massive, gigantic swings in the market. They're fairly stable. They're companies that personally I would like to own. Again, thinking a little bit Warren Buffett, Benjamin Graham, you should buy companies that you would actually like to own as a business owner. So that makes up about 90%. There's about a solid 60 to 70% that make up the most of my money, which is an index fund. And then there's maybe about 20, maybe 30% that makes up real investments, companies that specifically individual stocks that I have done research on and have decided to purchase in the long term. The last remaining 10, maybe 5% of my money is what I would describe as speculative investing. And it's not even, speculative investing isn't even a real word. It's really speculation. You could almost call it gambling. But these are more of the growth stocks, things that people are talking about, they're making some headway. And these are things that I won't exactly day trade by any means, but I would buy them, and perhaps in a few months, if they've gone up significantly in value and I'm kind of tired of them, I'll sell them and buy something else. But the main and most important thing to think about when it comes to these speculative purchases is that if I were to lose all my money, I'd be perfectly fine. Yes, it is pure speculation. If I were to lose all the money, I would be okay with it. But I would not be okay losing 60 or 70% of all my money. I'd be okay losing 5 or 10%. And that's kind of the attitude that you need to go into some of these speculations. In somewhat, I just describe it as legalized gambling. So that's the general breakdown of, say, my portfolio. But the way I actually invest is a little different. I adhere to dollar cost averaging. So every month I'm putting in extra money, just whatever I have from savings, into that index fund. But I do save a little bit of money off on the side, and that money will slowly grow just as cash. And then I take advantage of dips in the market. Typically, over time, perhaps within a year, you'll get maybe 4 to 5 dips or corrections in the market. More recently, we had one of these where a lot of stocks, the Apple split, Tesla stock, all these things were highly inflating the market. And you can just see this huge increase, and then now there's a bit of a dip. You can't time the market, and I recently made a video about not timing the market, but the interesting thing about dips is that you can see them very clearly. You can see them in hindsight, more importantly. I can see clearly that, oh, the market is just a little bit lower than its norm, and I can look back at the events, the news, what was happening, to get to that spot, to get to that place. And it's like, oh, well, that was a lot of speculation. That was a lot of thinking Tesla, for example, would make it into the S&P 500. But it didn't. And it generated quite a bit of pessimism. So the stock market went down a little bit. It continues to be down for a bit. So I take some of that extra cash that I've been saving that's aside from the dollar cost averaging, and then I buy on the dip. I consider it a fairly safe strategy. It's not perfect by any means, but I can understand it. I understand what is happening. So I'm still abiding by dollar cost averaging, but I do like to take advantage of dips that naturally occur in the market. So that is my investing strategy. And you may be asking yourself, but Alex, I want to make mad cash flow money, day trading, options trading. I want to do that. I want to get money super fast. How on earth do you adhere to this strict and somewhat conservative view of investing? And to that I say, my investing strategy isn't just something that applies to investing. It applies to many aspects of my life. In a nutshell, I described an investing strategy that's based on a few core principles and ideas, but it's also based on having a solid foundation. The S&P 500 index fund is my solid foundation. Sure, it will take some hits, but over the long haul, it'll do pretty well. And then I focus on a few other smaller things that I can pay attention to. I can actually focus on a few individual companies that I consider to be good investments and put a little bit more of my money and energy into them. And then lastly, there's a very small fraction of things that, maybe I can make a little bit of extra money, but I really don't spend very much, if not any of my time or energy, just focusing on those small things. But this is a principle that I apply to life. Let's take food and nutrition, for example. My diet is based on a very large and general principle of calories in, calories out. If I want to maintain my weight, I eat the same number of calories, both what I expend and what I consume. If I want to lose weight, I decrease the number of calories in, or I increase the number that's coming out. I'm not a fitness YouTuber, but the first law of thermodynamics needs to be upheld. My diet, foundation, first law of thermodynamics. Nice foundation. But then on top of that, I adhere to a vegan diet. I also practice intermittent fasting. So these are what I would describe as my kind of stocks. They're things that I can focus on. They're also part of just my general character, and I adhere to those. And then at the very end, it's like, okay, well, are there any speculations? It's like, well, maybe I go like super hard one day and I just don't eat as much, or I eat a little bit more, whatever. but it's all speculation. It does not make up the vast majority of my diet. This also applies to things like Taekwondo. In Taekwondo, you need to know all the basics. You need to know all the basic kicks, punches, blocks, all those things before you can even begin to think about being a black belt. But in order to do the advanced and crazy techniques, you need to know the basics. You need to know those fundamentals. And then maybe there are a few techniques, and this is one of the beautiful things about Taekwondo, is that you can learn a technique so well that you can almost create your own version of it. And that's something that's actually quite exciting once you get to the more advanced levels. But first, there's like a basic, broad foundation, and then you have like, okay, I can get good at the advanced level things. And then maybe speculatively you can try something really crazy, really new that you've like never done before. Now, I apply this general philosophy, strategy, and understanding to many aspects of my life. But yes, clearly, it doesn't apply to every single part of my life. It's just a few. So what you got there? Oh, this is just a letter I need to mail out. Oh, is that letter part of a solid foundation that makes up the majority, 60 or 70% of your ideology, how you live your life? No, not really. I'm not gonna mail it! So one reason that I mentioned my investing strategy and just kind of how I live my life is that the two are very similar, which means it's easier to adhere to it. It's inherently part of my character. It's not hard for me to save and invest in these big, broad index funds and not be swept away by the ideas of speculation and options trading and day trading and stuff like that. It's inherently part of who I am because I've gone through the process of working hard at building a strong fundamental basis with many aspects of my life, and knowing that once that is built, you can actually start to peak and create new, more interesting things on top of that. And then maybe there's a little bit of speculation at the end. What you reading there? Just a relaxing book, just some fiction, you know, just very chill. Did you invest 20-30% of your time and do research into choosing that book? No, not really. Hold on, I'm not gonna read it! I've mentioned a few times about the speculative nature of investing, options trading, day trading, and these are things that I despise. I just do not like it. That being said, there is a YouTuber by the name of Basim who I really enjoy his channel. He actually does these live options tradings, and it's not that he's just trying to get rich. He has a very humble approach about investing and more so options trading. He explains what he does, but he also says, this might not be appropriate for you. You need to think really hard about it. And even though I did these trades, you probably shouldn't do it. So if you're interested in options trading and not what my life is about and my investing strategies, you should check out Basim's channel. It's quite good. What you playing there? Oh, this is just a little game, Into the Breach. It's fun. It's a little thing. Is that game based on short-term, small, speculative investments that only make up a very tiny portion that can potentially make greater gains in the future? Nah, it's just a strategy game. It's whatever. Although I'm not gonna play it! So yeah, it's easy to adhere to some of these ideas, these strategies, because they are inherently a part of my life. But I would also encourage you to think about your life, to think about your strategies, and that those two things shouldn't be two disparate things, but perhaps they should be one. And that will make it much easier for you to adhere to a solid investing strategy. I hope you enjoyed this video. Please like, comment, subscribe. I really appreciate it. Help my channel out. And I'll see you soon. Oh, is that a different game you're playing there? Oh, this is just Diablo. Is that game based on strong character progression? It's based on maybe 60 or 70% of your character. And then you find new things that make up maybe 20-30% to develop your growth and fundamental basis, and to improve your character's performance in a progressive leveling system, to become better, to grow. Yes.